Hello, it's Friday the 3rd. I'm FxPlew and this is the market brief. So monetary policy, or the central bank's impact on the economy, can be distilled down to pretty much where cutting interest rates will stimulate the economy and rate hikes will restrict economic growth. While it is a little more nuanced than that, the property market is normally the first to be affected by any such change in policy. Now, despite a year of rate hikes, house price data has only just now reported a fall in prices. It's the first time in 3 years, but prices dropped to a decade low. Rates are rising to combat higher inflation, and where that is still over 10%, further rate hikes are therefore on the cards. The question is, how many more rate hikes will be needed to curb inflation? The other question is, what will be the impact on the wider economy and, of course, the housing market? And where will that leave the currency when the rate tightening cycle has all come to an end? All the big questions. Now, over in the US, there are rumours that the Fed is considering changing its target for inflation. And there are many up in arms about this, and understandably so. It's a bit like if you take a job in FX sales, for example. Of course, you melt the phones dialing for dollars and you find it hard. Obviously you find it hard. We know it's not easy out in the trenches, comrades. But you don't give up and ask for lower targets, do you? I mean, who trims a target? No, you put that coffee down, you practice your pitch, you polish your chat, and you master the close. If the Fed moves the goalpost, it'll be taken as an admission that they don't have the tools, or the talent perhaps, to bring inflation back to target. And whatever next? For one, they'll need to move the Starbucks out of the Fed, because everybody knows coffee is for closers. Meanwhile, employment data is still looking pretty good in the US. Weekly jobless claims have been trending lower since the start of the year. We had 190,000 claims last week. That was down from 192,000 last time around, and that's brought the 4-week average down to 193,000. This will help push market sentiment towards a strong non-farm payrolls next Friday, and that should give the Fed further headroom for more rate hikes. You know, assuming that they do man up and take on their target. In the market, the employment data helped the dollar index up to 105.20. Sterling slipped below 119.25 on the weak housing data. We opened this morning around 119.75 against the dollar. We're about 112.85 against the euro, and euro dollar is around 106.15 this morning. Capping off another week. Thanks very much for joining me. I'll be back on Monday. Have a great weekend.
If you do not have a clue, then just tweet through and ask FxPlew.